Dividend Gold investors, bonjour. My name is Mike Yehou and I'm the founder of Dividend Stocks Rock, and I'm also a passionate investor. Today is the day where I give you access to a full list of more than 100 companies with a safe business model and a generous yield. So this is part of this 7 days investing in 2003 for retirees series, and today we're going to go inside DSR using the stock screener. I'm going to show you and comment a few stocks, and then at the end you're going to see how you can download the complete list in an Excel format. So it's going to help you in your research to start 2003 on the right foot. So here we are on the Dividend Stocks Rock website. So if you're a member, it's going to be easy for you because you probably know about those tools. If not, I'm going to show you how our stock screener works. And then we're going to talk about some high yielding stocks for your retirement portfolio. As you can see, we offer a bunch of features such as portfolio models for Americans and Canadians, going from 25K to retirement portfolio. And we're going to talk about the portfolio, retirement portfolio tomorrow and the day after for US and Canadian. We also have a stock screener, a REIT screener, and an ETF screener. So regardless of what you want in your portfolio, we definitely have a solution for you. Among our other resources, we do have the DSR fundamentals. You know, I've realized that a lot of investors, they are interested in learning more about investing, about stock analysis, but they're not quite comfortable with a lot of financial concepts such as payout ratio or cash flow, evaluating debts, and so on. So what I decided to do is to empower investors with an educational part of that on the website. So we teach people how to analyze stocks, how to manage their portfolio, and this is found in the DSR fundamentals. You also have access to glossary and terms, my buy list, and the weekly newsletter. So now let's go back to the ETF, the stock screener, to look at what exactly is happening over there. So we cover more than 1,100 dividend paying stocks on both markets, so Canadian and US, and we do have the ability to apply a bunch of metrics and filters. So what we're going to use here is to use the dividend triangle in the first place. As I told you before, the dividend triangle is a combination of revenue growth, earnings per share growth, and dividend growth over the past 5 years. So you can see them here: EPS, revenue, dividend. So we have also the payout ratio and the cash payout ratio, but what really interests us is to make sure that those metrics are at least showing 1% growth over the past 5 years. It's not much, but it's a good start if we want to look at what's happening on the market. On top of that, I've coupled it with a DSR pro rating and a dividend safety score of 3, meaning that those companies are at least rated as old and also showing some dividend growth going forward. The last step that we're going to do here is we're going to use a 4% minimum dividend yield. I use the dividend yield forward, mostly because I want to consider the most latest dividend increase that the company announced. So if they announce it like right now, we know that the year later, the yield later on will increase, and this is the yield that we want to use for our filter. As you can see here, we have a bunch of Canadian and US stocks, some common names right here. You can obviously see that some Canadian banks are part of this lot. Bank of Montreal, definitely a great business. What I like about Bank of Montreal is aspect of growth. So they have wealth management and they have a lot of money coming from capital markets. It's a little bit more volatile than a classic savings and loans bank like TD, but it's also more profitable when they do things right. Second one on the list, Canadian Natural Resources, definitely another interesting one. This is a rare energy company that I like. I'm not a big fan of energy company most of the time because over a long period of time, they're not great dividend growers. So they look good whenever the oil barrel or the natural gas is going up. But whenever those commodity prices go down, they are short on cash flow, they cut their dividend, and the value of the stock plummet every single time. It's not the case with Canadian Natural Resources. They show more than 20 years of consecutive dividend increases, which is quite a feat in this sector. Another interesting one on the Canadian side, Canadian Tire. They have iconic brand. Obviously, they have Canadian Tire, but they also have Sport Check. Another thing that I love about them is the fact that they are pretty much Amazon proof. So they have their own online platform that is working well. They're also having a lot of high ticker or large ticker items that helps them to not necessarily deliver, but people will order online and then will pick up at the store. They finally has a lot of their own brands such as Motorcraft or Motomaster, which nobody else can sell, which is also another great play. On the US side, you can see here Digital Realty Trust. It's a data center REIT that is part of our buy list right now. REITs in general had a very bad year in 22. It doesn't mean that they're bad investment, especially for data center. Just think about the amount of data that we're using right now, using like our phone, using like the clouds and so on. So DLR will definitely continue to grow in the future. There are a lot of demand for this type of properties. And with a yield at 4.56, it's definitely an interesting one. Another REIT that we see here, Essex Property, one of the rare REIT that is a dividend aristocrat in the US. Maybe the only one actually. What I like about this apartment REIT is it is focused on great tech hub. So we have Seattle and then California. So they have focused all their properties in places where people are making some great income and they have this ability to pay higher quality rent. And this is where they excel at. Going a little bit further down, we see some Canadian banks. Another one that attract my attention is Next Era Energy Partners. Keep in mind, it's a limited partnerships. You have to be careful with taxes. It's a little bit more complicated. So you have to complete some forms. Maybe there are going to be some withholding taxes. But what I like about Next Era Energy as a whole is it generates first renewable energy, and they are the largest renewable energy operator in the world. That gives them an edge in terms of scale, but also in terms of expertise and how they can grow their wind and solar farm to make sure that they generate more income going forward. As you can see, we have like a bunch of different sectors from financial to consumer discretionary, utilities here, consumer discretionary for Best Buy, again, communication services, REITs. You have a bunch of those. Out of like all of them, you have 110 entries. So it goes on 3 different pages here. I'm not going to continue this video forever. What I want you to do actually is to click on the link description below and download the full list. So at DSR, what we can do here is we can simply export as a CSV file. So it's an Excel spreadsheet. We're going to actually make it look better for you because right now it's just raw data. We're going to organize the data and then you'll be able to download it. I want also to invite you for our webinar next week on January 12. This will be a complete webinar on how to invest in 23. We're going to talk about strategies. I'm going to provide you with more DSR newsletters and more lists for you to start the year on the right foot. It's completely free. You can get the replay if you register, and the link is right there below. So dividendstocksrock.com/YouTube-webinar. So it is a rendezvous. See you next week. And tomorrow we are going to talk about how low yield, high growth could also help your retirement portfolio. So a small portion of your portfolio could be focused on something that doesn't generate income, but that will spice up the soup and make your retirement even more comfortable. So until then, don't forget to give me a thumbs up. Send me some comments at the bottom, and we're going to discuss about how you can manage your portfolio at retirement. And until then, see you tomorrow. And don't forget to stay invested.